Hi everybody, Jeff Yasteen here, and welcome to Mailbag Saturday. Make sure to send me more emails, jeff@yasteen.com. And as always, you can follow me on Twitter and on Facebook as well. So I have 3 emails I'm answering here, and a couple are really more comments, not questions, but I enjoy reading them anyway, and we'll kind of just work our way through this. So the first one is from my friend Big O, who writes, "Thank you for the insights. When you speak, I always listen." And so Big O, thank you for following my videos. Thank you for writing in. One thing, I'll just take a step back here and say that when it comes to the stock market, right now things are easy, right? Stocks don't go down very much. When they do go down, and when they go up, they tend to go up a lot. And that provides a very nice trading environment, a very nice investing environment. And it feels great, right? Because you buy a stock, pick almost any stock it seems, and it at least doesn't go down, and quite often goes up far more than you might imagine. And that has a tendency sometimes to warp our expectations about things. So I'll just say thank you, Big O, for following me. But keep in mind, boy, it might seem like I'm especially clairvoyant, but I've been at this game long enough to know that it's not so much me as it is the market, right? So the market makes it easy for us. And the hard part is trying to keep to your investing plan when stocks are going down, when it's not fun. So just remember, for all of us, we have to keep the long view in mind. And the key is to make money, yes, in these bull markets and in the bear markets and corrections that inevitably follow, even though we can't predict when those are exactly when those are going to occur. The key is to survive, for your portfolio to survive those, so that you can come out on the bottom and still have a good portfolio intact. And be able to do well through those periods, as well as the periods like now when it's fun and it's easy. So Big O, thank you very much. So my second email is from someone, I'm just going to call him Oleg. Oleg from Alberta. I love that. As a new investor, he writes, "I'm so glad I came across this channel full of insights and tips for investors. By the way, I can't wait in years for your articles about Airbnb. Airbnb, keep the videos coming. Have a nice evening watching you from Alberta." So Oleg, thank you, appreciate all of that. And regarding Airbnb, now I'm taping this before the stock is actually trading, right? It's Thursday afternoon essentially here. As I understand it, the stock has been priced somewhere in the 50s and 60s, but the indications seem to show that it may open up for its first trade on the cleared trade on the stock market, perhaps over $100 a share. And this just kind of shows the sort of fevered atmosphere of the market right now. And that's why in the video, and I encourage you to go back and watch it if you're seeing this video now and have not seen the Airbnb video that I sent out on Thursday. But the idea here is that, if you're just speculating for the sake of speculating, that's fine. Understand the risks regarding all that. And that's why I noted the hot IPO of 2019 was Beyond Meat, and that came public at around 50 and went to 200 in a matter of like a couple of months. But if you're somebody who was buying it at 200 thinking, wow, this is fantastic, then suddenly over the next 9 months or so, you watched it fall from $200 a share down to like $55 or $60 a share. So that's an example of both the potential reward, and the unfortunate risks that come with buying into these IPOs. So with Airbnb, we just don't know how it's going to play out. And that's why I just generally say, if you're talking about investing, take a step back. And there are plenty of other stocks you can buy, which I think have somewhat less risk than buying Airbnb. On the other hand, I could say all this, and it could go from being priced at $100 to $200 or $300. I mean, who really knows on these sorts of things? But that's where I say, speculating for the sake of speculating, that's one thing. If it's investing, that's something else really. I also have an email here from my friend Geets, who writes, I want to thank you sincerely for sharing your analysis on the stock market. I've enjoyed many of your YouTube videos and look forward to many more. I'm a Wealth Press member too. So Geets, thank you for that. Geets also writes, watched your recent analysis on Tesla and electric vehicle stocks. So again, Geets, thank you very much for that. And I would encourage you to watch Adam Sarhan's videos because he's the true expert on Tesla and has been an advocate for the stock. You know, somebody's been watching that stock very carefully, literally for 8, 9, 10 years now, and is the real expert. And that's why we had him on Wealth Press TV last week. And I would encourage you to check out that interview between him and I, where he talked extensively about EVs and Wealth Press TV. And by the way, I would also encourage you to watch this coming Wednesday because I'll be interviewing Lance Ippolito about electric vehicle stocks as well. And you'll want to get his take on this very hot sector as well here. So Geets also talks about here, you mentioned a pullback for some stocks. It can be confusing because pullbacks can mean when price action drops 10% or pullback to 20-day moving average. Can you please do some analysis on pullbacks, strategies, or dips? I think we newbies need lots of clarification. So Geets, here's my thought on pullbacks, right? I try not to get too hung up on defining them too much in particular. To me, charts are a lot like art. You buy a poster or some piece of art that you like, and you put it up on the wall and you say, I like that, right? And it's the same thing for me with charts. I am almost exclusively using daily charts or weekly charts. Most of the time, daily charts. And so for me, when I talk about a pullback, it's typically a stock that's making new highs for the past couple of months, the past 6 months, the past year, or new all-time highs. And it has had a clear pullback to typically a 50, 100, or 200-day moving average. Most of the time, I'm usually focused on the 200-day moving average, simply because that's what so many institutional traders tend to look at. And the idea there is that you're buying on the pullback and you're expecting the stock to then re-accelerate higher. But the key to remember here is that when you buy pullbacks, it works great in a bull market like we've been having. But if at some point we move to a correction phase, or let's say a bear market, right? Nobody ever tells us ahead of time when those things are really going to happen. That's just the definition of a bear market or correction. And if you're buying pullbacks, frequently you'll see that suddenly that strategy doesn't work anymore. And instead of the stock re-accelerating higher, it then slowly fades. And then one day, you turn on your computer and the stock's down 5 or 10%. And that's just the part of the aspect that goes with trading. Geets writes in the email here, I did purchase AUI, got in at a good price. So let me just explain that for a moment to everybody. AUI is Yamana Gold. And I mentioned AUI as part of the roundtable discussion video that I did with James West on Monday, in which Adam Sarhan was there and Roger Scott, as well as Jeff Zananiri, and with me as the other Jeff. And I mentioned, a number of us mentioned about being interested now in gold stocks, and this goes back to what we were saying here about pullbacks, that gold, the commodity gold, as well as gold equities, had, in many cases, many of the stocks had pulled back to their 200-day moving average. And that was certainly the case with Yamana Gold. And so let me bring that up here because I just want to go over that more specifically. So this is Yamana Gold here, and this is the stock. And this blue line, that's the 200-day moving average. And you see here where the stock peaked out in August, and it's been in this shallow pullback, and it didn't exactly bounce off the blue line, the 200-day moving average, but obviously somebody saw another moving average, probably calculated slightly differently on the chart than I have here, and then the stock bounced higher. So this would be a classic spot where you would buy somewhere in here with the expectation that the stock will then turn and move higher. I mean, it might go like this, straight up, or it might just kind of go sideways and then turn higher. But the key, this goes exactly to what I was saying about pullbacks and using them as a strategy. You buy here, you get a little bit of a bounce. You're like, okay, great. I've got this this validation, if you will, and that's wonderful. But the key is to watch it because, I don't have a crystal ball. It's possible that if gold suddenly fell out of favor as this bull market, let's say we go into yet another phase in the early part of the year and it just accelerates even higher, gold might fall even deeper out of favor, and we might see it fall through this low here, which was like around $4.86. And somewhere around here is probably where I would look to exit the stock, saying, okay, I'm wrong about that. And so that's the element of buying pullbacks. You're looking for the reacceleration higher, but you also have to know that in the back of your mind, it could be wrong and the stock could fade, and you want to exit quickly so as not to have larger losses than you want in your portfolio. So one more time, back to Geetz's email here. Is KTOS still a good buy when the market dips? And this is the stock that Geetz is talking about here. KTOS is Kratos Defense and Security. And this is a stock that I've mentioned and featured in a couple of different videos over the last 3 to 4 months here. And I think I started talking about it in, I guess somewhere in here in August. I'll have to look back exactly. But you can see where the stock was basically flat and then has started to accelerate higher. So to answer Geetz's question, is Kratos Defense and Security still a buy or a strong buy? And I would say yes. The fundamental elements regarding the stock are all still there. If we look right here, this is what Wall Street analysts expect Kratos Defense and Security, a manufacturer of drones for the military. This is what they expect this company to earn over the next 3 years here. And the reason why that is important is because it shows nice, strong earnings growth, especially between 2021 and 2022. So for those reasons, with the earnings growth that we're seeing over the next 3 years, as well as just the continuing focus for the military on robotic systems of all kinds, this is something that's right up the alley for a company like Kratos Defense and Security. They make basically jet-powered drones that the different branches of the U.S. military use for target practice and for training against things like missile threat. One other aspect about the stock that I will tell you about, that's another reason to like it, is when I look at it on a very long view, right? This is Kratos Defense and Security back 18 years ago, right? The stock was $160, $170 a share, and obviously has come down a long way since then. This is the kind of thing I like to see here, where you have this stock, Kratos Defense and Security, which is now at 23, which is the same level it was July of 2019, and also the same level it was, what's that, 13, 14 years ago. And when I have seen stocks like this that carve out this long, long base that goes back for many years, and they finally start popping up above this cup, if you will, often that's a good sign. That's a sign of a stock with long-term strength behind it. And I would be looking to buy it here because as it pops higher, again, this is 2006 here, 2007. And as it moves up to that level, which is basically 27, it's the kind of thing where the stock often will just start moving higher and higher and higher. Again, it doesn't all happen at one time, doesn't all happen at 1 week or 1 month or 1 year necessarily. But this is where the true long-term strength often happens for stocks that have good fundamentals, good business models behind them. And in my view, in my opinion, Kratos Defense and Security has that, and I think can ride this much higher if we have a long view of these things and have some patience with the stock as well. So that's pretty much it for now for this week. I appreciate for all of you who wrote into the mailbag and we'll look for more emails from you in the coming week and try to do another mailbag next Saturday. So until then, I'm Jeff Yasteen.